Okay, great. I mean, I remember a lot of this was very much given to you in Workbook 3, which we'll dip into very quickly in terms of self-study. And then we did some of the numericals and some theory in class. But you will find a lot of this in Workbook 3, and I will jump into it. But again, I imagine most of you do work with budgets in some capacity. So as you can imagine, I'd be surprised if you didn't. You could almost kind of work and see through what was going on with some of these. So let's look at this. It says which is false. So that's what you want to be careful of, reading the question carefully. Which is false. Budgets force managers to think ahead and anticipate possible problems and solutions. And this seems fairly true. I mean, you can imagine this even without really studying the text in core in great detail. The budget process places reliance on knowledge and judgment. Yes, that is so true. Properly prepared budgets can provide powerful incentives to employees and management. That is one purpose of a budget, to provide incentives, targets, motivation. And budgets indicate what needs to be done and how it's to be done. Well, no, that they're numerical. It's a numerical tool, so to speak. It doesn't quite tell us what strategies to actually put in place to actually achieve or manage the issues. So this is false. D is false. As you can imagine, 186 carries on with something similar. Budgets should have clear objectives and measurable outputs. I'm sure you'd all agree. So we know that I is correct. I mean, it's still an exam, so we must think strategically. Staff internalization of administrative controls. No, not necessarily for budget output controls to operate staff. You don't need to have staff internalization of administrative controls. Effective audit arrangements, not necessarily. This has nothing to do with budgeting per se. Audit is just audit, internal controls, or nothing to do with the actual setting of the budget. And a predictive model, you do want that. I mean, that's the whole point of setting budgets, looking into the future, forecasting, carrying out what if, goal-seeking sort of functions, right? And so therefore we get the first and the last one being the right answers. Okay, great. Question 87. I'm just going to jump to the workbook here so you can see where you pull this out. This is very much a knowledge question, and it's coming out of here, and it talks about the different controls, if you like, in terms of it sort of highlights this idea of budgetary control systems. Control systems, 3 types of controls operating within an organization. Social control, where people behave, who fit in and comply with social norms, behave in ways that are considered usually normal. So that's the social sort of control within an organization. Just culture, people fitting in. And then you have administrative controls, and it talks a little bit about that. Administrative controls, typically your whatever the rules are and the regulations, if you like, within the organization. And then output controls, how tasks are to be performed. And it says typically these are the easiest to implement, these administrative controls. They are just technical rules that people written. Whether or not they follow them is a different story. Self-control depends on whether the individual identifies and complies with the administrative and social controls. So let's jump to the question very quickly, and we can see here that it says administrative, which is false. Administrative controls consist of rules and regulations and output controls. That is true. Admin controls are usually the easiest controls to implement. We've seen that is also true. I'll go to the last one. Output controls focus on the results of actions, leaving individuals some discretion about how tasks are performed. And that's correct. I think we might have seen that. It's in there. Individuals still have to carry out, individuals still have to actually do the thing, but that's what output controls are fundamentally. It's still at the it's just the controls are in place. Whether or not people follow them, people can choose how they follow. So that's correct. Social controls, we saw what social controls were, and it says as the levels to which identify complies with administrative controls. And we saw that this wasn't social controls. Actually, this was self-control. So it is self-control where the individual identifies and complies with administrative controls, not social controls. This has to do more with sort of the norms within the organization. Okay, great. And that was 87. Now, 88. I want to go back to the text. I mean, I will explain it, but I just want to show you where this idea of feedback and feed forward control. I don't think it's anything. It's actually quite straight. The word feedback is probably the key word here. When you hear feedback, what happened was there was a budget, something actually happened, and we compare what actually happened with what the target was. So we're looking backwards. It's retrospective. We're looking backwards. That's one kind of thing to do, right? You expect, that's quite normal. That's what feedback means, right? You have a standard and you compare with what actually happens. Feed forward is sort of saying you compare what's happened with a future plan, a forecast. So here we are. So let's just define these. Actual costs and revenues achieved against those that were budgeted. This is known as feedback. Feedback is received based on what has already happened. Action may then be taken. So feedback, control action to adjust the inputs. So we go back and we change those inputs. Like anything, someone gives you feedback about your behavior. You go back and you change how you behave so that, if you like, so typically to now do better, to adjust the inputs when the output is found to deviate from the standard. If everything is fine, you leave it alone, pretty much. You just carry on doing what you're doing. As opposed to feed forward, which is sort of telling us that we have forecast costs and revenues against predetermined or budgeted levels. So this is referred to as feed forward, as it aims to highlight the need for action to enable a forward-looking measure to be brought in line with the budget. So we're looking forward to see that, okay, this is where we are right now. Let's look forward. What's the plan that we have in the future? Is it in line with our plans? Right? Is it in line with what we're so we're not looking back, we're looking forward. So going back to the question, so you can imagine both organizations. An organization can adopt either feedback controls or feed forward, but cannot combine both of them. Well, this is false, because most organizations should be doing feedback and should be doing feed forward, right? So this one is false. Feedback and feed forward controls indicate the reasons for any variances between. Well, it doesn't tell us the reasons. It just tells us what the variance is. We still need to investigate the reasons, right? We just see the actual variances. So this is false as well. Feedback control compares budgeted and actual. It is retrospective. That's very true. Feed forward involves combining backward-looking performance measures with forecasts of expected future activity, and that's correct. So our answer here is 2 and 3. Which of the following is correct about budget building? Question 89. It is important that it's clear who is responsible for setting the budget within the organization. This is very true. Those with budgetary authority will not consult their junior members. That's not true. That's not always true. I mean, it just says will not, so that's not true. An organization's budget need not be consistent with the strategy. That's very wrong. Your budget must be consistent with your strategy as an organization. Individual budgets do not need to be developed for each area. No, that's very bad. You need to be developing budgets for each area. And then in this next set of questions, what I'm going to do finally is talk about this idea of the medium-term expenditure framework by taking you back to the text very quickly. And here we are. This is a government thing. See here. Let's look at what's going on here. Again, this is in workbook 3 in terms of planning, especially to do with public service organizations. One key aspect of this is the MTEF, a process laid down by the World Bank for transparent planning and budget formulation. The MTEF is designed to balance what is affordable against the policy framework of government and has 2 main objectives: to set fiscal targets and allocate resources to strategic priorities within these targets. So the government pretty much will set, if you like, budgets for different departments within the country. So to be able to allocate resources to strategic priorities, these priorities must first be determined by government centrally, and then by individual government departments. So you can see that it is long term. The government are sort of setting the budgets first for the different departments and speaking to them, and then individual departments will then set their budgets within what the government has allocated them, based on what is strategically important at the time. And must have this air of transparency, requires the priorities of the cabinets, blah blah blah. So the key point here is that it is usual for a plan to cover the next 5-10 years. Yeah, and I think that's kind of the main. Once a public sector organization has guidance from government as to priority areas, then they can set their own internal budgets. This is likely to start with a medium-term financial plan. So that's kind of the story there. So let's go to the question. And the question says that the MTEF is a process for transparent planning and budget formulation. That is true. The main objective of MTF is to determine government targets. Well, no, not quite. It's really to do with strategic allocation. The MTF avoids holding budget holders to account. That isn't true either. The aim is to improve budget processes by improving the predictability of budget allocation. It's very much about budget allocation. A government, in setting its own targets, it must look at other measures that are part of budgeting, but it must look at other sort of indicators in terms of, depending on what its target is, in terms of what is it exactly targeting, whatever inflation numbers or unemployment. But that's not what this is for. This is very much for allocations within the different departments. So this is 1 and 4, taking us to B. So that's question 80, whatever, to 90 done, and we'll carry on with the next videos.